Well, hello again from Carol King, the founder and developer of Custom Home Builder Solutions, also known as CHS. In this seminar, number 16, we are going to go over a little bit more about the percentage of completion accounting method. If you watched our seminar related to the methods of accounting a couple of lessons ago, where we were educating the builder owner about accounting, you will recall that one of the accounting methods I described and very briefly demonstrated was the percentage of completion method, which allows builders to recognize how much they have earned each month on their income or profit and loss statement. And in this seminar, I am going to show you that even though the percentage of completion method can seem very overwhelming, CHS will handle most of it for you. It's going to do the calculations needed for each active job and give you the screens to quickly make the POC journal entry using the numbers that it has calculated in order to handle percentage of completion. The percentage of completion method recognizes gross profit or earned revenues less costs throughout the life of each contract based on a periodic measure of progress. This method is preferred by consultants because it more accurately matches costs with earned revenues and therefore returns a more accurate picture of profit earned for a given period. It is very common for custom home builders to use the completed contract method of accounting for their tax returns and for their books, which means that they don't really recognize any gross profit on a job on an income statement until the job closes. This means that suddenly there is a great big gross profit in one month and maybe a bunch of other months that don't show any gross profit at all. So that's the reason consultants recommend the POC method, so that you can actually see each month how much gross profit you have earned on active jobs. And in order to do that, you really must determine how much revenue you have actually earned on the job, and that's usually different than how much you may have received. Earned revenue is calculated by first figuring out the percentage that the job is complete. To figure out the percent complete, you need to take your total posted job costs for the job and divide those by your current estimated costs for the job. And then you take that percent and apply it to the current contract price to calculate how much of that price or revenue has actually been earned. For example, if you have a contract price of $500,000 and you've estimated your cost to be $400,000 so that by the end of the job you're hoping to have a $100,000 profit, if you have had $100,000 of posted job costs so far, you would take the $100,000 and divide it by the $400,000 estimated cost and come up with 25% complete. Then you would take the $500,000, multiply it by 25%, and come up with a revenue earned of $125,000. Basically then, a percentage of completion journal entry will move the revenue earned out of the construction liability section on the balance sheet over to the sales section on the income statement. And it will move the current period job costs out of the work in progress section on the balance sheet over to the cost of sales section on the income statement. All of this can be really overwhelming if you don't have software to do this for you. Number one, you'd first have to gather up all the current numbers you need, making big old spreadsheets based on your accounting records, probably, to figure out the ever-changing current contract price and estimated costs at completion as of the end of the month for every active job. And you need to be sure you have posted any incurred actual job costs, whether they're paid or unpaid. And if you don't have a program to grab all of that information for you, you'll probably be like me when I used to have to do it all manually or with spreadsheets, and it can take you several days at the end of each month to accomplish it. So I wanted to be sure to program into CHS the tools that would just gather and calculate all the numbers for you and allow you to post a percentage of completion journal entry in just a matter of minutes for each job. So in this video, let's just briefly go over how CHS handles percentage of completion and show you the tools it has for you. I just want to demonstrate that CHS is handling percentage of completion and then go over the effects of using the percentage of completion method. So let's get started taking a look at it. So here we are inside CHS again, and again I have expanded all the sections for accounting here so that we can jump back and forth between some things as we talk about percentage of completion. But first I opened AJE's POC, which stands for percentage of completion, etc., closed jobs or books, and I've clicked on percentage of completion, which I already had open, so here it is. And if you will bear with me, I am doing this video in the year 2021, and I've made a lot of entries over the past several years, but none of them are totally complete because I'm not really a home building business. I make entries to do demos. So I just want you to be aware of that as I do that. I need to go back and use a job that we started in 2015 to do the demo of percentage of completion. So don't think that this video is real old for 2015, but I just wanted to point that out as you start seeing numbers on the screen. So I've opened this menu for percentage of completion, and it's asking for a range of dates. I'll come right back to it in a minute, but if you click help, you're going to see that first of all for percentage of completion it's talking about the methods of accounting we went over in a couple of videos back, but you could watch a video about that again so that you start understanding how percentage of completion is different from maybe completed contract or just cash method, etc. So there's a couple of videos here that I have a feeling are going to end up being this one video that I'm doing right now. But I did open the help document, and I want to take a look at that for a second. First of all, I've pretty well chatted about all of this stuff and what percentage of completion means at the first of the video. What is being pointed out on the second page is that you need to set up a couple of accounts on your chart of accounts to get ready to post percentage of completion. In order for this method to work, you will need to set up a contra liability account in the construction liability section of the chart of accounts, titled something like job income recognized. The revenue earned amount will be posted as a debit to this account to balance the sales entry and will reduce the total of the construction liabilities of the balance sheet. So if you watched our previous video, all of these three things are what are called credit balances, so they kind of show up with minus signs to show their totals is all that means. When we make the percentage of completion journal entry we'll do in a minute, we will actually debit job income recognized, which would lower the total of all the construction liability. And the cost incurred for the period will be posted as a debit to cost of sales that you select. So posting a credit to the sales entry and a debit to cost of sales means that the amounts are ending up on your income statement. To offset the entry to cost of sales, we need another contra account that is an asset in the work in progress section of the chart of accounts titled something like cost of sales recognized. The cost incurred for the period will be posted as a credit to this account to balance the cost of sales debit that we will make. This one will reduce the amount in the work in progress total on the balance sheet. We do it this way so that we can just keep putting all of our job costs for custom homes into direct construction costs and see that total without it being lowered by our credit for cost of sales recognized. So we like to keep them in two separate accounts, and this is called a contra account because it is contra to what the normal balance is for these sections. So let's jump back into CHS for a second and onto the screen. If you decide to start doing percentage of completion, you might have already made some entries throughout a year. Normally, percentage of completion journal entries are created a month at a time for every month so you can spread across the month. But let's say we're going to start doing percentage of completion and we want to do it for the whole year 2015. So let's take a look using a little tool that's over here, a general ledger summary by month and job. I'm going to go down here to direct construction, and this is summed by job, but you can see only one job is happening here, and that we had entries that sum to these various different amounts for each of these last 4 months of 2015. We don't necessarily want to do our little percentage of completion for each one of these months, which we could do by selecting each of these months, but let's just get started more quickly by doing one that's actually for the whole year. So that's what I have in here, is for the whole year, because we're going to start out, if I look at the chart of accounts, this is actually as of 2021, so ignore the numbers, but right now we don't have anything in cost of sales recognized, and we'll come back and see how that changes in a minute. So let's go to percentage of completion, and let's see a little report first of what we're going to see. And only one job, like we saw in that general ledger, is actually active during 2015 doing things. And here's a little report. We're going to actually open the worksheet, but the report is telling you what jobs are not included and what kinds of of things you need, and that the accuracy of the report is dependent on your estimated cost at completion. But let's open the worksheet to see that same stuff. If we'd had several jobs going on that report, you would have seen them. Same for the worksheet. They would be all listed here, and you're going to see that in a minute as we just do a couple things into 2016. So jobs are not included if there is no budget set up for them, because it cannot figure out your estimated cost of completion without a budget. If there's been no contract price set for them, because it needs to do a % of that contract price in order to figure out what revenue you've earned for the period. If there's no job to date costs or revenues that have been posted at all, actual costs and revenues, they won't be on here either, because there's nothing to recognize because you don't have any costs posted yet. Or if a job's close date is before the period, so if a job had been closed on 12/31/2014 or before, it won't be showing here if it's showing as closed. So anyway, you also need to be very sure that your estimated cost at completion is up to date, and we'll jump to that here in a minute before we do the 2016, because I want to demonstrate something else. Be sure you've reviewed the estimated cost of completion so that the amount that shows up here for what your estimated cost today is as correct as you can estimate it to be. So notice on this line, we can view to see if we've had any previous percentage of completion journal entries, which we have not. It says no records. The next thing we're going to see here is revenues estimate. In other words, the price that we're estimating it to be. If I drill down on the price calc, I can see where the price is coming from right here, $465.61. I've gone over this several times, but this is marked as a cost plus fee. This calculation is based on it being a cost plus fee, so it's taking the current estimated cost of completion plus the builder fee that we set, that you can see right here, and any change order fees. Since it's a cost plus builder fee, we're not taking the full price right there. We're just taking the difference between the estimated price and the estimated cost to say the estimated profit is that, and we're calling that builder fees that we add to the price. So you can get some detail about where that number is coming from right there. You can drill down on the estimated cost at completion, and you can see down here the 368,442 and review the whole entire worksheet, which we'll come back to and maybe do a little bit on here in a second. You can also see a report of the change orders for the job. Go down here, see the 333,155 that's affecting the price for a cost plus builder fee, etc. So the estimated profit percent is 20% based on these numbers. Now we see that no prior period costs were incurred before 1/1/2015, but current period costs incurred are $71,021, and that's for the whole year of 2015. And you can drill down and see the detail of those. Since this is the first time we've done that and there was no cost before this, job to date costs incurred are the same, and you would drill down and get the same report. It takes this number, cost to date incurred, divides it by the estimated cost at completion, and comes up with a percent complete for you. So you're not having to do all these spreadsheets to get all these numbers to come up with that. Prior period revenue earned hasn't happened because this is only happening in 2015, but job to date revenue earned is this percent times the price, and you could take your little calculator out if you want to check that. Current period revenue earned is that amount because we haven't done any previous ones. We'll see doing January here in a minute, and you'll see the difference. Then it shows revenues received, and if you want to drill down on those and see what they are, we've only received a little down payment of $10,000. We've spent all this money or posted costs, so obviously we're going to need to take a draw, and we can see what happens in January, early in January here in a minute to handle that. But it will show you revenues actually received over under the job to date revenues earned. So you see the numbers going along here. These numbers calculated here, if you have several jobs listed and you do the percentage of completion report, is what the Builders 20 Club quite often asks various builders to turn in, is a percentage of completion report on their active jobs. Can you see what a job that might be for you to sit down and try to figure all that out, or ask your accountant or your bookkeeper to try to do that? But if you have CHS, you can basically come over here and print the report and take it to your meeting. So that's one of the secrets my builders say that they have. So let's get on with it just a little bit. We're ready to create a journal entry. So all we have to do is click the button. The first thing CHS asks you for is the sales income statement account that you're going to be crediting for revenues earned. And these will be remembered from time to time. You can see how there's some numbers already in here, but the first time you do it, you'll need to select it. But I want it to go to sales single family home, the credit that I'm going to recognize for revenue earned. Then it asks basically what contra account I want to do against that, and that's that job income recognized that we did right underneath the construction liabilities, so I selected that. Then cost of sales account to debit, which cost of sales am I going to send those costs to on the income statement, and so I can select that. It will give you just income statement accounts here because it knows you're going to do income statements. Same up here when you drop down. Then it's going to ask what contra account are you going to use against that, because you'll be putting a debit here to 3,600 and it wants to know where to put the credit. And that's that little contra account right underneath your work in progress accounts. All these are selected and they will be remembered next time. Now if you're doing something a little different, it's not a single family home or it's something else, you might be selecting some different accounts here for creating the journal entry. But basically, CHS assumes that all job costs have been posted to an asset account in your work in progress financial group. It also assumes that all of your monies received have been posted to some construction liability. You can read this and discuss it all with your accountant. But it's this simple. Continue to create JE, and CHS is going to show you what journal entry it's about to post. A credit to sales, which increases sales. A debit to job income recognized, which is right in the construction liabilities to lower it. A debit to cost of sales, which will lower your income statement against the sales. And this is where it's going to put the credit so it can keep it in separate places and not mess with other accounts that you have there. So basically, it just says post the above journal entry. So that's all you need to do. It says note that if you need to edit or delete the journal entry batch after it is posted, you can go to the Adjusting Journal Entries window and look for the entry and do some editing. So, okay, I have posted those. It says it's been posted and a report of them will open so that you can just double check the whole journal entry batch that got posted, the ins and outs credits, and which accounts they went to. So, let's jump over to the chart of accounts for just a second and let's refresh it. And let's get back up to direct construction costs, the work in progress stuff up here. And you can see cost of sales recognized. By recognized, we mean that we have moved this amount out of direct construction costs in a way, but we used a contra account, and we moved it to cost of sales. Also, down here in construction liability, we now have an amount job income recognized, which is lowering the total of the construction liability. This is money you earned actually on the job because you spent the costs. So this whole concept of putting all the monies received in a construction liability because for some reason some job might fail and you owe the money back, this is actually reducing in a way how much you might owe back if the job failed, because you have earned this much money as of the end of 2015 for that job. And if you drill down on it, you can see that we did do one way back in 2013 and 14 and stuff for DeGroot, and we cleared it out when the books closed. But Vista View is showing up here 88,779.06, and that's the amount that we currently have in that account for doing the Vista View. So if we go over to financials and we do a little income statement, which won't have a lot in it, but for the year 2015 with GL numbers just because, we can see that our 88,779 is showing up as a sales and cost of sales for this. And we haven't posted a lot of other things for admin expenses, etc., but you can see how it has landed there. Now let's say that we now want to do January. So let's go back to the percentage of completion. We want to do January and start doing our monthly all the time in 2016. So let's do 0101 to 0131 to 016. And let's go ahead and open our percentage of completion worksheet. We have another job starting to show up here because apparently we started having some costs for a job, and you start having multiple jobs where you can do the journal entries. So because of those little costs, it's acting like you've earned a little bit of money based on the price for Smith John. But we're focusing on the Vista View one. Notice now that we show prior period costs incurred, which was the amount that we moved at the end of 2015, and current periods. So we see that there's some current period stuff going on here that we do want to do. So over here, CHS has taken the job to date's cost incurred divided by the estimated cost at completion to say this is now 20.70% complete. And it's gone over here and said job to date earned is $95,335.43 based on this 20% times the current contract price, and it takes the difference actually and puts current period revenue in right here. So let's just go ahead and create that journal entry really quick. Continue to create it, and let's post the above journal entry. And it shows you the journal entry again. I also forgot to mention that if you drill down on revenues, you'll show we're not short of revenues for what we earned anymore, because right at the 1st of January, we apparently took in an interim draw. See how the date on this is January 5th. So we're increasing our revenues to this amount that we see. So we're not really short anymore. We saw that in December and we jumped over and took a draw. Let's now go and do February. Now what I want to do is go make a little change to the estimated cost of completion for this, but let's go ahead and open this. We have another job starting to show up in here, which is another one that started on January 5th. So now in February we've incurred some costs, and it is a fixed price one, and you would also do the journal entry for it, but we won't bog things down with that. What I want to do is drill down on the ECC, and it says important. If you make any changes, remember to refresh the percentage of completion worksheet. What I want to do is maybe go through and see if there's any of these that I need to mark as being done. I'm just going to decide there's probably something down here. Notice that we have actual cost of $22,658 for materials floor framing. And if we drill down on it, we're going to see that we got a discount on that, I promise you, and stuff. And we decide, okay, this is done. We're not really going to go with the PO amount anymore as our ECC. We want our ECC to change to our actual cost, which means our amount down here for ECC and over under budget will change once I check mark that. You should go through and study each line on your ECC to be sure that it is just current and accurate. So our ECC is now changed to 368,015.72. If I go back to the percentage of completion worksheet, and like it warned you, let's refresh this. So it's brought in the latest and most current estimate that you can have of what you're expecting your cost to be at the end of the job. So again, for this month of February, CHS has taken the job cost to date incurred, divided it by that current ECC, and come up with 29.43%. It has this much in current period costs, this much in prior costs incurred, and it's going to be putting this one into cost of sales. It's going to take the 29.43%, apply it to the contract price to come up with job to date revenue earned, take away the prior revenue earned, and say this is the current period revenue earned, $40,046, that we will be recognizing in sales. So if we create our journal entry, and I continue to the journal entry, what I wanted you to notice is that I went and made a change to the estimated cost at completion. In other words, there's changes that can affect those numbers that we had. Like maybe you go change back in January some job cost that was used for the percentage of completion, or delete it, or you change something about the estimated cost of completion between last month and this month, like I did. The little bit of change that is affecting revenues is just $22.10. This is showing prior period revenues earned, but the prior period journal entries were only this amount. So it's going to do the adjustment. It's going to catch you up. If you make any previous changes, it's going to say, okay, in this month, we're going to get that caught up and evened out to recognize what our revenues earned are. If you did any changes to your cost of sales, it'll catch that here and show you. So you get a big alert box explaining that to you, that these numbers have been adjusted just a little bit in order to make things even out at the end of the month. Hopefully that makes you feel comfy about all of that. Like, oh no, I did my percentage of completion journal entry for January, but now I went and deleted some cost, or I changed a cost in January. Well, you can just be kind of comfortable that CHS will catch that difference in the next month when you do it. So I'll post this journal entry for February. Okay, that's good. Shows me the journal entry. And if I view JEs, just because I'm wondering if I've done journal entry, you can see the journal entry that was done in December 2015, January 2016, February 2016. So you can see and look at that for each job to say, did I do it or not for February? I can't remember. But another neat thing on the menu over here, let's do 2016 now for a year to look at of a general ledger. And let's get down to our direct construction costs. See January, February, March, April, January, February, March for that Vista View actual cost going on. The cost of sales recognized for Vista View is the only one that we've been doing. And we can see that we did January and February, and that can tell us we did our percentage of completion entry because there's stuff showing up in that contra account. And down here, under the liabilities, all the way down to our contra account, we can see job income recognized right here as a debit that's lowering the construction liability. I know that's a lot, but it is the tools where you can go use that. So if we jump over here back to the financials, and I do an income statement, and I say I want to do it for 01/01/2016, 202/29/2016, and I do an income statement with GL numbers, you're going to see our amounts, the January and February amounts that we have put in. This is not going to include 2015 because I didn't ask for it, so that it's being able to show you year to date what we've earned and what we've spent for the various jobs. Now, like I said, this might be including a whole bunch of other jobs, not just our one job, but see how now it got on our income statement. The other interesting thing I'd like to show you about all of this is back on home, there's an activity spread by months. Let's take a look at that. It's a whole big ledger of all of our accounts on our chart of accounts, and it's spreading it by year. You can see each one of these lines is for a year. Now we're only interested in the income statement ones, so I did a search, and I'm going to come down here to everything after equity. Remember, I did that in the last thing. That's all your income statement ones. And I only want to look at 2015, and I'm holding down my key on my mouse to select these two, and I did the same thing over here. You can also click the top one and then go to the bottom one, hold down your control key on the last one, and it'll get all those in there for you too. So let's submit a search for just those 2 years for just income statement accounts. Now what I want you to see is that in January and in February we now have some sales going on, and as we go through the year we'll have some more. In 2015 we just did the percentage of completion entry for the whole entire year for Vista View, so it came in December. If we don't do any of these for Vista View, the percentage of completion, and we go close it in 2016, like in November, October, November, or August, who knows when, and we're on completed contract, then you won't see any of these numbers spreading. You'll just see the big amount of the sales here under sales and the big amount of cost of sales all happening in 1 month. That's called completed contract, so that you're not recognizing any of the sales or cost of sales till the job is closed. So you'd have all zeros here, and then all of a sudden in 1 month you have this great big gross profit. Now, is that really reality? That's not really reality. You have been earning, believe me, these amounts through these different months, and if you continue on to March, April, May, you'll start seeing them across here. Notice how you can see rental income starting to happen in March because we got some rental properties and that kind of thing. And here's our cost of sales going on. May have a little bit because sometimes we'll post, in March that has nothing to do with percentage of completion. Maybe we did a little bit of final stuff on something for a job that was closed and put it in cost of sales in the year 2016. But hopefully as an accountant you can get the concept of how valuable, and you can do reports of these spreads. So hopefully you can understand what I'm talking about there and how percentage of completion can show you very cool things versus doing completed contract. So if you're an accountant or a bookkeeper that has been watching this video, it may have occurred to you that you were doing those February percentage of completion entries in 2016. And what happens if you go change a cost or delete a cost that was in that month or prior to that month? What will happen? Do I need to go delete my percentage of completion journal entry because it included all incurred costs, both paid and unpaid, in the month of February to do the entry and figure out the percent complete, etc.? You may be wondering what will happen. Should I go delete it, like I said, or what else might happen. So what I'm going to do is I've opened this and we've decided for some reason this cost that was posted for $95, we're not going to ever pay it because of whatever. We're not going to just get into that, but I've opened unpaid bills for that vendor and it's not paid, so I don't even need to void a check, but I am actually going to delete a February cost for $95. So let's do that. Continue to delete the record. So it has been deleted, and there's an audit about deleting that if you ever had to look that up again to figure out what's going on with percentage of completion. But I'd like to show you first of all, if we go home and if we go to adjusting journal entry screen, notice this little entry Vista View with a 2-2016 and Vista 3811 for 2015 that we did and one for January that we did. And you can search for things like all those percentage of completion adjusting journal entries that CHS creates for you. The batch ID starts with the job code. So if I do Vista V3811 and I do a search because I know that that's how those batches are, you can easily see that I did a journal entry in December of 2015, January of 2016, and February of 2016. And if you look at the batch report, you can see that journal entry we've been displaying before for you. The thing is, you can just delete that whole journal entry batch for February and go redo it on the percentage of completion screen. Go recreate the journal entry. All those percentage of completion entries are is a simple journal entry batch that can be edited actually with a pencil icon. So there's no rocket science to it. It really is just a simple journal entry that you can still delete or manipulate if you want to. But let's go back to the percentage of completion worksheet without deleting that February one. Let's jump to March. Let's open our percentage of completion worksheet. And we're ignoring all the other jobs except the job that we've been looking at, which is this 3811. And we do have some current period costs to go ahead and post a journal entry for. It's now calculated 51% something complete, etc., etc. But we will create the journal entry. It remembers again, like I said, all the GL numbers you had selected for the journal entry last time. But let's continue to create the journal entry. What I'd like you to notice is, first of all, taking away that 95 affected, probably since this is a cost plus job, affected the contract price. Now over here for costs, you'll see that it's noticed that the prior costs incurred are this amount, but the prior recognized JEs are this amount, which is $95 higher, and that's because of the thing that we deleted, so the costs incurred went down. So what CHS is telling you again is that it's going to do an adjustment. It has adjusted this amount of cost of sales and this amount from what we saw. See, this says 88,597.79. Over here, we were seeing 89,547.79. But it's telling you why it's going to post a little bit different. What it's going to do is bring you up to date and get everything right. And if it's small amounts like $95, etc., it's okay that you're going ahead and adjusting for that in March. It's just not that much different, and it is always an estimate. And CHS is doing the estimating for you, but it's always an estimate when you're doing percentage of completion journal entries. So I just wanted you to know that. I will go ahead and post the above journal entry so that we now have January, February, and March percentage of completion entries for that job. Let's go back over here, take a quick look at 2016, and let's just do a ledger, get ourselves down to the stuff we're interested in. Direct construction costs, Vista View, that job. Now you can see we have direct construction costs of those amounts, which is just amounts we've been posting for costs. But we have come along and recognized this much, 118. We have not 118,433.76. We have not done April, so adjust that by 400 in your mind. And we have 118,133.76, which is the total of all the way up to here that we have recognized in cost of sales. And if you go down to cost of sales on the income statement, you will see 118 is showing up here in an account, cost of sales, that will show up on your income statement. Just wanted to prove that to you. Now there's one more thing. Before I let you go, I'm going to close this, and I'm going to close the journal entries. I'm going to go home, and I'm going to say, I want to close this job. It's closing in April. It's not really, but I'm just going to demonstrate something to you. But first of all, I'd like you to know, if you look at help about job closing journal entries, Let's take a look here at the document that is available about job closing, because I think the last page is going to address percentage of completion. So let's see if I'm right. Closing a job that has percentage of completion. Let's get this bigger and let's zoom in just a little bit. If you've been using percentage of completion accounting method, there will probably be some additional work in progress and liability accounts to close when you're closing it. See help documents about percentage of completion. The additional accounts that might be in the list if you are using the percentage of completion, one titled cost of sales recognized and one titled income recognized or job income recognized, or really whatever you titled them. The cost of sales recognized account should be closed to an appropriate cost of sales account, like the same cost of sales account that is used to close the work in progress direct construction cost account, and this is a job closing entry. The job income recognized account should be closed to an appropriate sales account, the same sales account that is used to close the work in progress liability accounts, like contract deposit. When the percentage of completion accounting method is used, the progressive entries are usually posted to sales and cost of sales accounts at the end of each month. Those entries are, quote, offset with entries to the cost of sales recognized and job income recognized accounts. When the job closing entries are posted, the balances in those accounts and the other work in progress and liability accounts will cause a net income or loss effect that is appropriate for the closing month. Because you will have both the balances for both work in progress right here and cost of sales recognized, the difference between these two would be the amount in your final closing month, because you put both of these to cost of sales, and the net of those two will adjust the cost of sales just for that month. So if you're an accountant, you can probably follow me on that, I hope. Let's use April 30th, 2016 and say we're closing the job for whatever reason it closed. We're not really done, but we're just pretending. So we put that date in, selected the job, and if we continue to the job closing window, it's warning me about my old dates because I'm in 2021. But notice it's coming up here with direct construction costs and the amount in it. Then the cost of sales recognized so far, and that would have been through March. So there's a little difference here, and that would be the amount that you would end up with, the difference between these two. If when you create the journal entry, you want both of these amounts to end up in cost of sales. When you do your job closing deposit with all your HUD papers, if you watch tutorials about that, you're probably going to end up with only one account in the construction liabilities, because these all get cleared out as you post that deposit, but let's just ignore that for now. If you moved all of these to sales and then this debit to sales for all of these like construction liabilities and job income recognized, the difference between those two would be the amount for April, which would be the same amount as if you'd done a percentage of completion journal entry for April. So it kind of all washes out when you do the job closing. I hope that's not too confusing. I did just want to reassure the accountants about that, who do understand percentage of completion, that CHS does have a window to do your job closing journal entry where you're clearing it all off the balance sheet and over to your income statements. And by having those contra accounts, if you move the contra accounts to the appropriate cost of sales and sales accounts, it'll all net and wash out, and it will be okay. So hopefully you can imagine how much time CHS has saved you by giving you the percentage of completion worksheet and all of the things that I just showed you. It has kept you from having to make a ton of Excel spreadsheets. If your bank or if your Builder 20 Club has insisted that you do percentage of completion, or at least give them a report of it, you can be very comfortable that CHS is doing all the legwork for you to gather all the numbers and give you the numbers, and that it's watching things for you. If you do not accidentally, but if you do go change something in a prior month, it's going to adjust for that in the next month that you do your POC entry. So thank you for watching, and please stay tuned. We will, in the next video, talk about more in detail about closing a job when the job is really closed, and closing your books at the end of a fiscal year.